All right, traders, welcome to today's market recap. This is Christian from Tribeca Trade Group. It is Thursday, April 4th, right ahead of a nice 3-day weekend. So happy Easter to everybody who celebrates. And risk disclaimer in front of you, everything that we're going through is for information purposes only, not giving out any advice or recommendations. Please read the whole risk disclaimer here. So more pressure to the downside. What can you say about this market in 2022? All over the place. For example, what was the performance of the Qs yesterday? Was up just over 2%. Today, down 2.3%. What did I say in yesterday's video? One day is not a trend. You have to be very careful with these one-day moves. It is remarkable. Let's look at the Qs first, but it is remarkable to see, days like we're seeing where, one day there's absolutely no way that the Qs could get up and rally. There's sellers keeping it down. Another day, and these days are more few and far between, but we did see, yesterday just heavy, buying all day long and really no major selling at all. And then today's kind of, the opposite again. So, like I said, it's pretty remarkable how we're getting this. And the way that, I kind of am thinking about this is, something like this, which if you cover up the chart, this is probably not a chart that you want to own right now, right? It's very back and forth. We're below the 200-day moving average, right? There's some people that see some things in the Qs as possible, an inverted head and shoulders. I am very skeptical. I would let that pattern kind of really start to make shape and form before I would go with that type of conclusion. I think we're more likely to come down and visit where we were. And I think if you go through some individual names that are in the Qs, particularly if you look at the semiconductors and what they're doing, there are names that are, if not down there already, are starting to lean down that way. So I would be cognizant that the things that I look at, number one, the 200-day moving average, right? Price is below the 200-day moving average, right? Number two, we've got to break below the 50-day moving average, which is the where I've got my cursor now on that moving average. That's not a sign of strength. And then third, we've got the 80% rule in effect for the month of April, meaning we started the month outside of the value area. We have entered the value area, and now there's an 80% chance that we could go to the other side, which is 13,203. Or if you want to look at the Qs instead of NASDAQ futures, and if you want to level this, I did go over this yesterday, or if not yesterday, the day before, 321.07. Right, and that's a bearish engulfing, believe it or not, based on the bodies of these candlestick patterns. So, option expiration has been this way. So also, we're now at the halfway point of the month. And yeah, I mean, it's a very, very tricky month. So, I've been trying to explain this different ways to members of the Tribeca Trade Group, and just kind of talking through, like, the price action and so forth. It's very difficult, I think, to be very comfortable over time with names like Apple, Microsoft, Google, and many other tech names. But I think if you look at a chart and zoom out, I think that, certainly this year, tech has not been the place to be. And I think if you can make adjustments, right, and not stay perma anything, and not stay stubborn, right, if you're doing more trading than investing, right, you could really have yourself a good year, right? And then also, maybe able to get into like the tech growth area at cheaper prices, right? If you're not involved in it, right? And I think that's a big thing. I think that's a big concept right now, right? If you could stay out of this mess in terms of what the Qs look like and what growth looks like, you may find some good buying opportunities, but not yet, right? And especially if you look at the weekly chart, right? And just realize, to me, looking at this now, is we do have a weekly bar because tomorrow is a holiday, is closed as a holiday, right? But you could see that this is starting to look different, right, than what we've seen. These previous moves over the last couple of years, we've seen this kind of snapback, right, when we've had a decent correction. But this looks like this has been firmly rejected, right? We came up here and tested 2 weeks, and we got rejected, and we're starting to move down, right? And you could look at this as well, which is the 50 period moving average, and it looks like we may spend a good portion of this year, if not the whole year, inside the value area, and we may actually come all the way. It's possible, and I don't mean to be painful to anybody, but I think it's good to kind of look at at what the charts are telling you, so that you can formulate a plan. But you have to be open-minded for that. And I'm not saying that this gets taken out right away. This was the point of control for the month, but the 80% rule is still in effect, and 297 could be something that is seen. Now, again, that could be scary if you're in a lot of these stocks, but you need to kind of form, in trading and in investing, of course, you need to formulate a plan, right? And to say that this is this is not looking great, I think is important. So, and I've been caught in trades. I was going over this, again, I've been trying to kind of give you several examples, but I tried some trades about a week ago in tech, and I'm out of those trades. I got stopped out of those trades. And that's fine. Like, I'm glad that I'm not in those trades any longer, right? So it's important. I talked about this earlier. I talk about it in many of these videos, but if you're a trader, right, how you are handling your losers, right? We all have losers, right? Especially in this type of market. How you're handling your losers is going to define your year, right? This is we've talked, and again, I repeat myself a lot. I apologize, but this year is different than others. Somebody mentioned this to me, and they responded to one of my YouTube videos, which is great. I love the feedback. And they said, well, 2020, 2021, they were not normal years. That's true. But the reason why I emphasize 2020 a lot is because that's when a lot of newer traders, younger traders, started in this market, right? So I bring it up a lot because that's the most recent years that we have. That year, if you made some mistakes, right, the market kept bailing you out. It was a fairly, easy market, because if you did make mistakes, the market just kept on bailing you out, right? And people got confident in that too, that, hey, I made a mistake. A couple of weeks later, that mistake turned into a positive, right? They're like, yeah, I held, in the market, I ended up being right. That's not what we have on our hands this year. So the market is not bailing you out anymore, right? And the way that you're handling some of, the losers that you have is going to define things. And I'll tell you a couple names that I stopped myself out of last week. I wasn't happy about it. But those names were all lower, from where I got stopped out. So, I say this a lot in trading too, that you could have a bad day, right? You could have a horrible bad day, right? But you really don't want a bad week and a bad month, right? And, you have to also remember too, that everybody's human, right? You're going to make, even, following your trading plan, right, very closely, you're still going to have mistakes, right? And especially in this market that is moving this fast. So don't beat yourself up if you have mistakes. Just, it's the old saying, it's fine to be wrong. It's bad to stay wrong, right? That's a saying that you hear all the time in this market, and it's really, really important. Because I think this year is the year of of the last 3 or 4 years, this is a year that you have to be super, super disciplined and also go with the trends. So we talk about this, right? And here is the performance over the last 5 days, right? S&P down to so this does include last Friday. So just bear that in mind. Because this is just data that I compile from like a 5-day spreadsheet, right? That I get the data from Bloomberg. So the SPY was down 2.4%. Dow was also down for the week. IWM was only down 0.3%, just less than. Just make sure that that's right in my spreadsheet. Yeah, only down a fraction of a percentage. Qs were down 4.4%. IWM, EFA both down. TLT, we've talked. I'm not going to talk too much more about bonds, but they were also, a contributor to today's volatility. I think especially in growth. TLT was down another 2%, and gold was up for the week. The cryptos were down. Value outperformed a touch. But not much, still in the red. And here's your performance when you look at what's been going on here in terms of the sector performance. I mean, if you could stay out of the areas that I just talked about, and I'll talk about one more too, right, which is SMH, right, which is the semis, which I view as a leading indicator. This is very close. So I mentioned, right, you could have said this looked like an inverted head and shoulders for a little bit, right? Left shoulder, head, and no right shoulder, right? It broke that, and it's testing the lows from 314, right? So this is not a good sign, and I think this could go down to 224, right, before you see support, right? Now, what is acting well? Well, it's the same things, and I say this a lot too, and if you're a regular viewer of my videos, you know that I'm a trend trader. So these are the things that are trending, right? And I think it's best not to, bet against these things. It is best to go with what is trending, right? Here's your breakout back here, and as we talked about in yesterday's video, which I'm not going to go through all these charts, but on a day where the Qs were down 2.2%. You had XME up another 1%. So, some really nice looking trades. ATI broke out. It's funny. This was something that I was in, and I was in this thing for about 2 weeks, and I lost patience with it. Also, I was looking at my overall exposure to this group, and I said, hey, I like tech resources a bit better. So I stood in that one, and that's worked out for me. But I actually added this back. I actually added it back this morning. Right, so there's my starter from this morning, but yeah, I mean, that's there's some really interesting plays like this. Another one that we were talking about in the trading room too, but look, I mean, this thing's up 6.7%. Another one that we caught today too, which was NOV, right? And there's just a lot of this going on still in energy. There's a lot of call buying, right? There's a lot of positioning, right? NOV was one of those names that saw call activity today. Again, pulled up the chart. This was a name that I played back in here, took out that upside virgin point of control, VPOC. Somebody asked me the other day in a video, what is I cover the VPOCs just about in every other video, but here's a good one where you could see a virgin point of control is a high area of volume that has not been revisited, right? So price will seek these things out and oftentimes do that, take it out and revert, right? So they're really good for like if you're long a name, knowing where a name might get up to and then fade a bit. And that's where we took off this NOV trade. But it's been kind of getting a bit coiled here. Not exactly coiled because you have 2 moving averages wrapped around, not 3. But I'm long this, and I did take a target or 2 in this one. SLB is another name, right, that had a nice day today. I didn't get right to the top of value, but got pretty close to it. So, sometimes it helps to cover up the symbol a little bit if you just haven't been playing this group that much, right? Valero is another one that looks interesting to me too. Here's another example. This is a bit stronger, right? Took out this virgin point of control, no fade, just consolidation. So to me, this looks like it might want to go higher. I like that name a lot. And then another name too that's kind of new is KBR. Had a nice move today, right? That's a breakout to this one. So I got long this one. It was a little bit of a chase. So, it's important when you're chasing, this is the first day of the breakout. I don't mind chasing the first day of a breakout, but I tone down the position size. If I catch it very early where the stock's up like 1 or 2% on the breakout, then it's a different story. But I think I caught this thing late in the day and said, hey, I'm going to try a name like this. Tech resources also went higher, but ended up closing essentially flat. Other things, right? Just to review the rest of the week's performance, it's just same things that have been working well all year long, right? OAH up 7.6% for the week. Gold miners, I took a target in Newmont. Right, this has just been continuing to methodically move higher. We've seen some call positioning earlier in the week in gold. Right, so here's what I think is like with option activity. Right, you could go with the ones that see the option activity, or you could pick your own. Right, I don't see that much difference between a Newmont and a Barrick Gold, except I think Newmont is a better name personally. So it's in the same group, and I chose that one. So gold miners were up. Even retail was up. IYT, just to kind of cover a name that we were looking at, a group that we were looking at. This might be a place to short. I actually put on a short trade here, right? A little bit, big move down, kind of a weak rally, check back to resistance, bottom of value, and we'll see if this starts to go back down. So I did put that on. Also to cover, just another area of the market, something to watch for next week. I think this ARKK ETF, right? So I'm not going to say anything real negative here about the management, but we just heard that the management of ARKK was just gave some interviews. They're not changing, right? They're going to stick to their plan, right? They're not adjusting to this market, right? That kind of gives us a little bit of an edge, right? If this market continues to do what it's been doing, right, where there's inflation and commodity type names are continuing to trend and high growth is trending down, right? And they're not going to change their plan. They're not going to adjust to what the market is doing. And if the market continues to do what it's doing, then this may break 58, 57. So I did get long some SARK today. It's kind of a little bit of a portfolio hedge, right? That's the inverse of that, right? But again, like that's where edges are defined, right? If you know someone is not going to change no matter what, and the market is doing something different, I view that as, the trade opportunity in terms of trend following. All right, and aerospace and defense names, we talked about the material names too. They've been showing some strength. All right, so that's what we have for performance. Was there anything else that I think I covered enough for the day before weekend video? We covered the NASDAQ a lot. Let's go over just the S&P chart. This as well has me concerned, right? This is also back below the 50-day moving average and back inside value. Remember, the issue here is that the S&P index, the tech is the biggest weight in the index, right? You could look at the equally weighted ETF, which is not looking that great either, but at least it's showing a little bit better strength because tech is not dominating the index. Actually, I'm sorry, tech may still be a good portion of this ETF. It's the individual names that are equally weighted, not the sectors. All right, so if we look at, so for example, just to bring this up. So again, RSP is equally weighted, meaning it's the same names in the S&P 500, but they equally weight them. Let's see if, no, actually the sectors do look pretty equally weighted. All right, so tech is not a huge weight in this ETF. All right, so they did accomplish that. All right, and then a couple other things just to show you another thing that is trending, right? Is this Cow's cash flows ETF. I've made mention of this a couple times this year. I am long this thing. It is continuing to work. It is continuing to trend. It did not break out to new highs today. But still outperformed, only down 30 35 basis points. All right. So those are the things that we kind of look for at the Tribeca Trade Group, just things that are acting better and getting out of things that are acting poorly, right? Being super disciplined. All right, guys, that's it for the weekend video. Again, if you're not a member of Tribeca Trade Group, I need to probably do this more in these videos, but if you want to belong to, a community that is very much using a lot of teamwork to help one another out here, especially in this market, right? Versus, if you're trading alone and you're struggling right now in this market, I would say give it a try for a month, right? You're not obligated. You don't have to sign up for a year or anything like that. You sign up for a month, and then at any time you can cancel, and then you're not on the hook for any more than the month. That's it. All right, so give it, check it out. I think it will add value to your trading system and what you're doing. If you have any questions, you could feel free to reach out to me on Twitter. Have a great weekend, everybody. See you next week, unless you're a member, and then you'll hear from me this weekend.